Hello people, today we are going to learn about disposal of plant equipment and trading old ones with new. Impairment of assets. If the cost of an asset cannot be recovered through the future use or sale, the asset should be written down to its net realizable value. Disposal of plant and equipment. Update depreciation to the date of disposal. Journalize disposal by recording cash received as a debit entry or paid as a credit entry, then removing accumulated depreciation on the debit side, and then removing the asset cost on the credit side, and then recording a gain on credit side or loss on the debit side. So this is how we journalize for the disposal of plant or equipment. If cash is greater than book value, record a gain, which is on the credit side. If cash is less than book value, record a loss, which is on debit side. If cash is equal to book value, no gain or loss. So this is how we will record when the book record the disposal of plant and equipment in the journal. Let's do an example to understand more. On September 30, 2003, Evans Map Company sells a machine that originally cost $100,000 for 60,000 cash. The machine was placed in the service on January 1, 1998. It has been depreciated using the straight line method with an estimated salvage value of 20,000 and an estimated useful life of 10 years. So we know that the original book value was 100,000 and estimated salvage value is 20,000 and useful life is 10 years. So for calculating the depreciation, we have to deduct 100,000 minus 20,000 divided by 10, which will give us the depreciation expense for each year. So the amount of depreciation recorded on September 30, 2003 to bring the depreciation up to date is, so on for calculating annual depreciation, we know that we have to deduct the salvage value from the book value and divide it by the total number of useful years, which will give us the annual depreciation rate and dollar value. So this comes to be $8,000 per year. So for calculating for the 3/4 of the year until the 30th September 2003, we will just multiply the fraction to get the for the partial year. 9 months divided by 12 months multiplied by 8,000 will give us $6,000. So for on September 30, for that particular year, the amount of depreciation will be entered as 6,000 and not as 8,000. 8,000 is for the entire year. After updating the depreciation, the machine's book value on September 30, 2003 is, cost was 100,000, accumulated depreciation for 5 years for annual depreciation as calculated before was 8,000. So we will multiply it for 5 years. 5 year multiplied by 8,000 plus 6,000, which will give us 46,000. So the remaining book value at the end of September 2003 is original book value cost 100 minus 46,000 will give us 54,000. So answer is 54,000. And 5 years we have to calculate from 1998. We purchased on 1998 to 2003, so which makes it five years until now. So that's how we have calculated here for 5 years. The machine sale resulted in, we have to answer this question, so let's calculate. Original cost was 100,000, accumulated depreciation as calculated before was 46,000, book value came to be 54,000, and then cash received was 60,000 as per here. The sale original cost 100,000 and sale was for 60,000. Total cost 100,000, accumulated depreciation was 46,000. Then we calculated the book value. Book value is cost minus accumulated depreciation, which gave us 54,000. Then cash received after this disposal of land was 60,000. So 54 minus 60,000 is gain of gain of $6,000 because book value was well less, but we got more money for disposing that equipment. So there is a gain of 6,000. Trading in used asset for new ones. Accounting depends on whether assets are similar or dissimilar. Similar means we trade an airplane, old airplane with a new airplane, or dissimilar means truck for an airplane. Only situation where cash is paid will be demonstrated. Let's see. So dissimilar as in case of dissimilar asset, we should think about this. We should recognize the gain and recognize the losses. In case of similar asset and cash paid, we should not recognize the gain. We should recognize the losses. Let's do an example to understand more. On May 30, 2003, Essex Company exchanged a used airplane and 35,000 cash for a new plane. The old airplane originally costed 40,000, had up-to-date accumulated depreciation of 30,000 and a fair value of 5,000 or $4,000. So let's see. The exchange resulted in a we have to calculate the value, whether it was a gain or loss. So the cost of the plane original old airplane was 40,000, and then it is saying that there is an accumulated depreciation of 30,000. So 40,000 minus 30,000, book value is 10,000. Then again it mentions that the fair value is 4,000. So from book value we will deduct the and from 10,000 we will deduct the fair value, we will get 6,000. So there is a since the fair value is only 4,000, so there is a loss of 6,000. The exchange has resulted in the loss of 6,000. Here it mentions the fair value is 4,000. Let's prepare the journal entry. Since there was a loss of old airplane credit will be old airplane dollar value will be written on the credit side, which is 40,000. Cash uh, cash earned by the exchange was 35,000. 35,000 cash for new airplane. So cash on the credit side and accumulated depreciation as given is 30,000. Loss on exchange as calculated before was 6,000. So if you calculate both sides, we'll get the new airplane debit value of 39,000 because debit and credit should match. So guys, I hope you got some idea on how to calculate a disposal of plant and equipment. So subscribe to my channel or come back to my channel for more videos on accounting and other things. Thanks for watching.